Hello, fellow option traders. This is Jeff, and this is the third in the series on the credit spread system version 2.0. And in this particular video, I want to talk about how to put in a stop loss OCO, one cancels other order, in the Thinkorswim platform, but pretty much the rules on almost any other platform would work the same as well. Okay, so today I needed to wait until I actually opened a position, and today I did open one on Apple. Let's take a look at the chart. Here we have, remember in the video earlier this morning I said that Apple here dipping down to a 28.9. It gets below the 30 level, and that is good enough for me. So that makes it tradable. And you can see that it actually almost moved all the way up to 80 this morning, but we're green, green, and green. So that we entered here, and we entered at 557.50. Take a look at the actual strikes that we had available for us. This is Wednesday, so I picked Friday expiration because Apple's got earnings on Monday, and I don't want to ever stay in Apple very long anyway. So I'm going to take advantage of this surge, and what I'm going to do is I'm going to put a limit order in at 50% profit, and I'm going to put a stop loss in at 100% loss. And the reason why I do that is I want to make sure that it's got enough room to roam, I guess you could say. So I'm willing, whenever I do these trades, I'm willing to take the whole loss. If I look down here, this red number here is the red line, and that's at expiration. And it says that, you know, if we're below 55, 54, 56 or so, we're going to take maximum loss. So that's not very far away from where it is right now, but right now we're following this white line. But I just want to make sure that it has enough room to move. I can always change it tomorrow or later today. So I call it breathing room on my stop, because once it triggers, it puts in a market order, and you're going to get the worst price. So the worst price would be 250, right? I would take the whole loss at 250. So that would be my worst price. And I'm looking for a 75% gain. So as of this moment, and this white line is totally dependent on time, if I was looking for a gain, all right, so I'm going to let you know first how much I collected for this thing. And you can see here that it was 75 cents. And this was $2. Oh, wait a minute. That's my canceled order. Sorry about that. I collected $1.25 on a $2.50 spread, $2.50 spread. So if I take this $2.50 loss here, I'll lose $125, and because I did two of them, I'll lose $250. So I'm just taking this $125 that I collected, and I'm adding my risk to it, which is $125, to come up with the $250, which would be my max loss. And on the other side, because I collected $1.25, a 50% gain would be $62.50. Let me write that down. So if I can buy this back for $62.50, I will have gained $62.50 basically, and actually it would be $125 because I have two of them. Now, if you can figure that out, that's great. But anyway, so here's how we put the order in. Now you can do this from several different screens. You can do this from the monitor tab. You right click and then hold down the shift key and right click again. And I'm sorry, let me back that up. Back that up. Okay, you left click on the first position, and then you hold down the shift key and you left click on the next one, and that gives you, it puts them together. It highlights both of them at the same time. You right click and you say create closing order, and that's what you want to do. You can do that from this screen. You can do it from the trade the trade tab. It'll show you what your positions are. You just do the same thing. Left click, shift key, left click, right click, create closing order. Or you can do it from the analyze, anywhere where you see your positions and they look like they might be clickable, I guess you could say. Oops. You have to make sure that you get the whole row here. Come on. Okay. Highlight this. There we go. It's not going to let me do it from here. Always used to. Oh, now that is very strange. Huh. Okay, well, I guess can't do it from the Analyze tab. I usually do it from the Account Monitoring tab anyway. So we'll go back here and we'll just say, okay, we can't do it from the Analyze tab. I could have sworn I was able to do that in the past. They must have changed that. But anyway, that's how you do it. So we left click, shift left click, right click, create closing order, and here's our closing order. Now we want to make this an OCO order. So we click on this advanced order box, left click on it, select one cancels other, right click on this particular one, on this existing order, and say create a duplicate order. You'll get this message because they're both exactly the same. But we're going to make this one a limit order, and the one below it will make the stop order. So we'll change that to stop. Alright, so you can see here that it's going to be on the mark. And it's going to issue this. This is a day order. You'll probably want to make it a good till cancel order. So we left click on these and we can select day or good till cancel. So we select good till cancel. This is a limit order and we wanted this at what? 62.50, is that correct? Yes. So we want it 6.2, oops, 5, no, point, 0.62. We can't get the 6250 in there. So that's a limit, and our stop we said was going to be 250. Alright, so we have those two values in there. A limit order and a stop order, both one cancels others. So in other words, if this order gets filled, oops, a little finger jerk there, then this order will get canceled, and vice versa. If the stop order gets filled, the limit order will be canceled. So it's sort of like an autopilot, I guess you could say. All right, so let's take a look at what this means. Let's go ahead and do a confirm and send. And you can see your two orders are going here. If you want to read the whole thing, the whole thing is here. So order number one would be $129, and this one would be $260 with the costs involved there of the $5 for the transaction fee. It would be one or the other. It wouldn't be $10 total. It would just be $5, depending on which one executes. We go ahead and send that. Okay, it's out there. So the status of the stop order is await, and this one, the limit order, is working. It's just waiting for this price of the spread to get to 62 cents to buy it back. So remember, I collected $1.25, and if I can buy it back for 62 cents, then I made 63. So I would be happy with that. Now, you want to see what it looks like on a chart? You have to go up here to the chart settings, and over here on the content on the very first general tab, you click on the orders and you say you want to show the orders, and here they are. Oops. What? Oh, here we go. Okay, all right. So it does a calculation based on this current moment in time to place where these price levels are. It's not firm because, as you know, as we get closer to expiration this Friday, these lines are going to start squeezing shorter together. Now, unfortunately, I'm not able to show you that, but if you watch the daily videos, if you watch the 123 one, we'll take a look at where it is. Maybe I'll take a little snapshot of it at the end of today. I might do that before I go ahead and wrap this video up, is take a snapshot at the end of the day and see what it looks like. I could even wait until tomorrow and see what happens. So I think I'll probably do that. So I'll just wait to get this package out until the 23rd, January 23rd. Here we are, January 22nd of 2014, and it's 11:34. So, yeah, I'm not really done with this video yet. So we'll be looking at it as it ages, like a good cheese or a wine. As it ages, it'll get better. I'm sure of that. All right, so that's it for now. We'll take a peek at this later. Okay, here it is. We're at 3:41 in the afternoon, and it doesn't look like as though our stop has moved up at all, nor does it appear that our limit has moved down at all. Definitely Apple has moved down, but we're still green and green, so we're okay there. I'm not going to panic about that. Let's just take a look at the way that it did look this morning. If I can find it here, here it is. Okay, so this is the way that it looked this morning. And if we switch over, we're at, 562 and 544 here, and we're at 544 here. This is where our cursor is. It says that here, and we're probably about 562 there also. So they have not moved. Now the reason why they will move, and I can show you on the Analyze tab, is these white lines are going to start moving closer as expiration approaches, are going to start moving closer. So that means that our 50% profit line is going to start moving on a plane like just above this line right here. It's going to start moving towards the red line as we get closer to expiration. Maybe we'll have to wait overnight for it. We'll see how it looks tomorrow morning. And the same thing goes for the line down here. So that means that our total loss is going to start getting closer and closer to our long strike, and eventually we'll meet up with our break-even point here. That's why I'm saying that on the chart here, these two lines are going to start getting closer together, just as they would here on the Analyze tab for a given price. So the vertical here is the price, and we're talking 126 is right here, and this white line is going to start moving this way. So our price down here is going to start it'll get below 560 maybe tomorrow. So if we can hit 560 tomorrow, maybe at the open or something like that, we will bail on this. Order will be triggered and we'll be out. Or if it gaps down or something crazy like that in the morning, then we may very rapidly end up with a total loss on this baby. So I'm a little bit leery about the stop on this order because it's a market order, and I have seen these when I try to, when I look at what a market's going to be when I'm near total loss, it actually is greater. I don't know how it can be greater, but I guess it can be. So we'll check this tomorrow morning. It's Wednesday afternoon. 15 minutes before the market closes approximately. So we'll check it tomorrow morning. Okay, so now we're going to take a look at what happened to Apple. Today is Sunday, January 26th. This is the day that we opened the trade, and then the next day we still had our limit and stop order in, and it looked like this. This is the last video that the last portion of this video. This is what it looked like after I had gotten into the trade. Later in the day, this is, I can't tell what time it is. I don't think I have a time on there. But I took a snapshot. And this is how it ended up that day. Now the next day, it actually opened here and started heading down. Opened right here, started heading down. The option guru took a look at it, and here it is here on, I think this is Wednesday, or maybe it's Thursday. Thursday, it started heading down, and look at where our limit is, way up here. Past 580, and our stop, we were almost at our stop. So because of that, I canceled both of these orders, and then I went in and I did a limit order, and the limit order that I put in was for $2.30. It was, at the time, it was flipping around between 220 and 230, 235, somewhere around there. Now, if I was to take a look at this on the, let's take a look at the orders here. Okay, so I collected $1.25 for it, and so I was taking, because this is a $2.50 spread here, my $1.25 was my was the credit that I received, but I also had a risk of $1.25. So those two together is $2.50. So if I was to get out at maximum loss, I would have had to buy it back for $2.50, but I didn't. I actually got out at $2.30. Turns out if I would have waited longer that day, as evidenced in the chart, I may have gotten out close to break even, and may have very minimal loss on this. But it didn't turn out that way. So I effectively did not pay any attention to my rules, but this is for illustrative purposes. I can rationalize anything just like anybody else can. But the way that it was moving in the morning really did kind of scare me. So I decided to get out. And if we take a look at this, actually, we had a double down, a double red. And that's what, convinced me, well, maybe it's just not to be. And it did turn out eventually on Friday that it was not to be anyway, and I would have taken maximum loss on Friday. And I would not have hit my limit for exit at, remember, it was 50% profit I was willing to do. So that's the way that it worked out with the limit and the stop order, as the one cancels other. Now, again, I want to caution you about stop orders at max loss, because what could happen is that the order actually gets submitted as a market order if you're at max loss. So the market is going to take advantage of you when you throw a market order out there, and they're going to give you the absolute worst possible price you could possibly get. And believe it or not, you would end up with more than max loss. If you take, like the bid ask, worst case for both your short and your long, they're going to stick it to you, I guess you could say. So a word of caution there on that. That's why I canceled the order and I put a limit order in, and I didn't take max loss. Actually, it was only $1.05 or something like that I lost rather than the max. So that's the caution that I would put out there. I would probably not do a stop order at all. I would always shoot for the limit, and if it gets to expiration Friday and then you have to do something because you're taking a loss, then you have to do the best you can on Friday. That's the only advice that I can give you. But hopefully you don't have to do that very often, because so far you get like almost a 90% success rate so far on the trades, maybe about 80%. So that's darn good. So we're going to stick with that and work on our limit orders to get out at a profit. Okay, so that's it for the initial series. I may be adding more videos to this afterwards, but for right now, this is it for the initial launch of the credit spread system version 2. All right, thank you very much for watching. If you have any questions or comments or anything else, feel free to either email me, comment on the blog, or comment in the YouTube channel. Thanks again for watching, and happy trading.